All right, let's dive in. Today, we're looking at a really interesting car, the BMW i4. I mean, when it launched, it felt like the electric ultimate driving machine, right? Became BMW's top EV seller in the U.S. And it's a fantastic car, no doubt. But, there's always that hidden cost with premium cars, especially high-tech ones. Depreciation can be brutal. So today, we're digging into the i4's financial story. What's its true value over time?
Yeah, and what's really fascinating is seeing how the i4 actually holds up against the pretty tough used car market right now. We decided to really zero in on the i4 eDrive 40 for this deep dive. It's generally seen as the sweet spot of the range, so that should give you the clearest picture of the financials.
Okay, so let's just get straight to it. The numbers, because this is where it gets pretty eye-opening. So take a 2022 i4 eDrive 40, launched with an MSRP, manufacturer's suggested retail price, around almost $57,000, $56,395. What's it worth today, on average? Around $35,500. That's, a 37% drop in about 3 years. Does that kind of number shock you, given it's a BMW?
It's definitely stark, a real sign of just how volatile the EV market is. And believe it or not, it gets a bit more intense. The 2023 model, that started higher, around $58,095 MSRP. That one lost 35.5%, but in just 2 years.
Wow, 2 years.
Yeah. Just 2 years. And that faster drop was really pushed by competitors cutting prices pretty aggressively, and also, incentives changing all the time. Even the newest one, the 2024 model, started around $57,300. It's already down about 23% in its first year, averaging $44,000 now. So it really shows you that first owner takes a substantial financial hit right up front.
Okay, so we're seeing this really steep curve downwards at the beginning. Like if you picture on a graph, it just dives. Our forecast suggests the i4 might hold just under half its value, 50% after 5 years. So a car that cost almost $60,000 new could be worth less than $30,000 after, 16 months? Why? Why is it dropping so fast for such a good car?
That really is the core question, isn't it? And it's like a perfect storm, really. Multiple factors hitting at once. First, just the sheer speed of EV tech advancement. It's furious.
Right.
Every single year, you see real improvements. Battery range gets better, charging gets faster, the tech inside the car gets updated, which makes older models feel, a little outdated, faster than maybe traditional cars did.
Right, makes sense.
Then you've got battery anxiety. It's a real thing in the used market. Even with good warranties, like BMW offers 8 years or 100,000 miles, which is solid. But there's still this underlying fear, maybe perception, about what happens after the warranty, the potential for a really expensive battery replacement, maybe 5 figures. That definitely pushes used prices down. Okay,
what about government incentives? You hear a lot about tax credits. Do they help or hurt here? Because the i4 being built in Germany often doesn't qualify for the big ones, like the $7,500 federal credit in the U.S.
Exactly, and that's a key point. When those credits effectively lower the new price of competing EVs that do qualify, it indirectly makes the used i4 less attractive from a price perspective. It pulls the value down.
Okay. So the incentives for new cars hurt the used i4?
Precisely. And then there's the Tesla effect. When Tesla makes a big price cut on, say, the Model 3, it sends ripples through the whole premium EV segment instantly. It basically forces other used EVs like the i4 to adjust their prices downwards just to stay competitive.
So it's getting hit from multiple angles. Tech, batteries, incentives, competitors.
Pretty much. However, and this is important, it's not like the value just falls off a cliff entirely. The BMW brand itself acts as a pretty strong value floor, like a safety net. BMW has built up massive brand equity over decades, right? Known for quality engineering, luxury feel, how they drive. That reputation helps stabilize the depreciation curve over the longer term. It prevents a total collapse. The badge still means something significant.
Okay, that's a crucial counterpoint. The brand helps cushion the fall. So let's bring it back to the listener. What does all this mean for you if you're thinking about an i4? It seems like there are two very different paths here.
Absolutely. It boils down to this. If you're set on buying a brand new i4, you just have to go in knowing you'll take the biggest depreciation hit, especially in those first, say, 24 to 36 months, 2 to 3 years. That steep drop is, frankly, one of the main costs of owning it new. Even with the perks, full warranty, latest tech, that new car smell.
Right. That's the cost of being first.
Right.
But, and this is where it gets exciting for savvy buyers, That rapid depreciation, it creates a fantastic opportunity in the used market. Our data really points strongly to this. The financial sweet spot is finding a 2 to 3-year-old used i4.
Exactly. That's the smart play financially.
You step into a car that's still very modern, looks great, drives brilliantly. It's a premium EV experience, often still under some factory warranty, but for a fraction of what it cost just a couple of years earlier.
Yeah. Look, the BMW i4 is, by pretty much all accounts, a truly brilliant car. It successfully brings that BMW driving DNA into the electric age. But viewed purely as an asset, it exists in a really volatile market right now. So understanding this depreciation story is absolutely key. It helps you decide not just if you should buy one, but maybe more importantly, how you should buy one to make the smartest financial move for you.
So there you have it. A fantastic car facing some harsh market realities. It really makes you think, doesn't it? What's the premium you're willing to pay for new versus waiting for that value sweet spot? Definitely something to consider on your EV journey.